Hello guys, welcome back to my channel. Bitcoin price prediction, BTC and hyper expected to rally this October. And in this October, I want to know what are you going to think about the Bitcoin and what's your prediction? I've been reading the news recently and I've been seeing a lot of people that are making videos on this. And there was another big news yesterday. I was going through that and there was someone who posted about 2 billions. And I'm going to make it short. I'm going to explain about billions dollars, which has been kind of Treasury Buybacks and it's some secret QE or money printer. So I'm going to explain it to you. What happened in the July and the 2 billions, and then again if you look at to the debt, which are around which is 27 trillion. So after I saw everyone was posting about Bitcoin and 2 billions, all these stuff, what's the truth here? I'm gonna make it short and I'm gonna make it much more clear for you guys so you can understand it. That's not the actual whole story, okay? And if you trade or invest without understanding the actual mechanic here, you are basically playing the wrong game. Literally, you are into some game. You are playing in the game, they are playing with you. Is this buyback a steal, in July, a form of QE or just a minor liquidity tweak for you? So I'll feature the sharpest comment in the next videos. What the Treasury is really doing with these buybacks and why they double the frequency of operation. What it means for bonds, stock, crypto, and even for your portfolio, let's say. Most importantly, how to avoid getting baited by flashy headlines. So stick around because by the end, you will be able to tell the difference between noise and signal. And that's where the traders make money. So what is setting the stage? The US Treasury, not the Fed actually, and as of July 2025, they said we are doubling the frequency of long end buybacks. So that means in the 10 to 30 years bonds, instead of 30 billions a quarter, it's now up to 38 billions. 38 billions sounds like a huge, right? So, but in the Treasury market, which is 27 trillions plus, it's like a drop in the ocean. That's your first lesson because scale matters here. Think of it like this. If you pour a glass of water into a swimming pool, technically you change the water level. But are the swimmer really noticing? Not unless you are right next to them. So here is what people miss. This program is routine debt management. The Treasury even publishes a tentative buyback schedule already. You can just literally go on Treasury Direct, click on the buybacks announcement and results and see every operation, date, maturity, and the size. So this isn't somehow a shadow QE, it's a tactical tool. Have you wondered why? Because older and less liquid bonds trade with wider bid-ask spreads. That means dealers have double making markets in them already. So the Treasury buys them back to improve liquidity and then reissues fresher, more liquid debt. So that's it. It's like a swiping out old, hard to trade cards into the deck of new ones that everyone wants. So doesn't mean you printed more cards, just change the mix. So the 2 billions confusion, why the big viral headlines? Well, each individual buybacks operations and has a maximum capital, max cap of 2 billions in those long end maturities. That's the number that keeps getting recycled. But here is we need to understand here, the Treasury is a price sensitive bias, meaning if dealers aren't offering at attractive levels, they don't even hit the cap. So they can and often do buy back less. So when you see Treasury bought back 2 billions, that's not a surprise. That's literally this upper bond they set weeks in advance. And imagine someone's headline, traders withdraw $100 from ATM. Well, yeah, because the limit was $100 doesn't mean it's shocking. QE was the Fed creating reserve to buy treasuries at the scale, trillions, at the scale trillions, and keeping them on its balance sheet. This is the Treasury moving money around and funded by taxes and borrowing sounds like different animals. It is not a signal that the government is panicking. They have actually run buybacks before and in the early 2000s. So the effect on average debt maturity is tiny. It doesn't change the total debt. It's going to be shuffling the structure only. So if it's not a stealth QE, why should traders care if you know liquidity pocket? Okay, so if it's not the stealth QE, why should traders care? And if you know liquidity pocket, these buybacks support liquidity. And in long-dated treasury, that can smooth volatility in the 10 to 30 years yield. If you are trading bonds, duration like ETFs or even rate-sensitive stocks, that really matters. So what is market psychology here? Even though the program is small, headline makes people think like it's going to be bullish or it's a bullish. That knee-jerk reaction creates like trades, okay? And if it talks to the sector impact, and if talk about the sector impact, then yield are more stable. Yeah, like sometimes you see tech and growth get relief. If yield spikes despite buybacks, and it tells you the market's bigger than the treasury sport. By crypto narrative, if you see, you will hear the crypto crowd spinning this as like liquidity injection. But be careful here, the actual liquidity effect is more modest. But narratives moves markets, and even if the fundamentals not going to do that. In July, when Treasury announced the frequency increase, some traders immediately went long risk assets here. Nasdaq had a little pop, but here is the interesting thing, like bond yield didn't collapse. Why is that? Like, because 8 billions extra per quarter isn't enough to overpower global supply and demand, right? So that right there shows you the difference between narrative-driven moves and structural reality. Smart traders ride the narrative, but exit before fundamentals slapping them. So what do we do with this? So always check the treasury on schedule. It's actually public, so respect the scale, okay? So 2 billion sounds quite big, but it's tiny compared to 27 trillion in debt. Play the psychology, not just like a fantasy. If everyone think buybacks bullish, you can trade their reaction. Just don't confuse it for QE, and that's the scale gap, okay? Separating what's actually happening from how the markets react. So most traders fail because they don't know the difference.